Chapter 10. Dividend and Interest. Question 5. Answer in brief. 4 marks each. 1. States any 4 points to be kept in mind by a listed company with respect to dividend. Answer. Dividend is that portion of the profits of the company which is distributed to its shareholders. There are certain legal provisions for declaration of dividend, such as 1. The rate of dividend is first recommended by the board of directors and then declared by the shareholders in their annual general meeting. 2. Shareholders shall not declare dividend exceeding the rate recommended by the board. However, they may reduce the rate of dividend. 3. The company must open a separate bank account, called as dividend account, in a scheduled bank, and deposit in it the total dividend amount within 5 days of its declaration. However, if the company's shares are listed on the stock exchange, it has to fulfill additional requirements as follows. A. It has to notify the date of the board meeting at which recommendation of dividend is to be considered to the stock exchange where company's securities are listed. B. It has to intimate stock exchange immediately after declaration of dividend. C. It has to give notice of book closure to the stock exchange at least 7 working days in advance. D. It must close the register of members and transfer register during book closure. E. It must use electronic mode of payment like National Electronic Funds Transfer (NEFT) or Electronic Clearing Services (ECS) as approved by the RBI. F. Listed companies are required to express the dividend on per share basis only. 2. Discuss any 4 features of dividend. Answer. Dividend is that portion of the profits of the company which is distributed to its shareholders. Following are the features of dividend. 1. Out of the profits. Dividend is paid only out of the profits earned by the company in the current year and previous years. It can also be paid out of capital profits, subject to certain conditions. 2. Recommendation of Board of Directors. Shareholders can declare the dividend in annual general meeting only when it is recommended by the Board of Directors of the company. 3. Declaration of dividend. The rate of dividend recommended by the Board of Directors is approved and declared by the shareholders in the annual general meeting by passing a resolution. 4. No dividend for previous year. Company cannot declare dividend for any previous year for which annual accounts have already been approved in the annual general meeting. 5. Dividend once declared cannot be revoked. Once the shareholders approve and declare the rate of dividend in the annual general meeting, it becomes a debt and cannot be revoked by the Board of Directors. 3. Explain the features of interest. Answer. Interest is the price paid for the use of others' money for a certain period of time. It is paid by the borrower to the lender. Therefore, it is the cost for the borrower and income for the lender. Following are the features of interest. 1. Price for use of capital. Interest is the price or consideration for the use of others' capital fund for a certain period of time. 2. Directly related to risk. Interest and risk have direct relationship. If there is high degree of risk, the rate of interest will also be higher. 3. Rate of interest. The rate of interest is expressed as an annual percentage of the principal amount. For example, interest 10% per annum on borrowed amount of rupees 1 lakh means rupees 10,000 annually. 4. Factors determining interest. Various factors, like money supply, fiscal policy of the government, rate of inflation, volume of borrowings, etc., determine the rate of interest. 5. Charge against profit. Company has to pay interest, even if it does not earn any profit. Therefore, interest is considered as a charge against the profit of the company. 6. Fixed rate. Generally, the rate of interest is fixed and predetermined at the time of borrowing.